Hey YouTube, this is the Web Wealth Whisperer. I'm back again with another video. Today I was going to talk to you about the gold to silver ratio, why it's important, why people talk about it, how to make money off of it, and all of that good stuff. So right here on the screen I have the 10-year gold to silver ratio chart pulled up, and you can see like back here in 2016, we got as low as like 65 to 1, 65 ounces of silver to 1 ounce of gold. And if you look in 2020, then you can see it was about 125 ounces of silver to 1 ounce of gold. So what does that tell us? Well, basically, let's say we're getting started right here, July 28th of 2016. That would mean that you would want to buy gold in this case, because that's about the lowest you see the silver to gold ratio. So it means you can get 1 ounce of gold for right at 70 ounces of silver, which is a lot cheaper than getting it for 125 ounces of silver. So let's say we bought 1 ounce of gold here, at 70 to 1 on the gold ratio or gold to silver ratio. And let's say we made a strategy that we were going to trade for silver when this ratio hits 90. So we are going to wait here and just hold our gold, and then it's going to go up and up and up. And it looks like it's about 2019. We hit our magic number 90. Now we can go to the local coin shop. We can, trade our 1 ounce of silver for, not, or 1 ounce of silver, or 1 ounce of gold for 90 ounces of silver. So we haven't bought any. I suggest dollar cost averaging and buying this whole time. But, even if you didn't buy any, you just bought 1 ounce of gold back here instead of 70 ounces of silver. Now you have 90 ounces of silver. You didn't do anything different. You didn't buy any more. You just got, 20 more ounces of silver, basically just for waiting. And then our next move is we are going to, to trade for gold when it gets back down to 70 again. So we go down to 80. That doesn't hit. We go up to 125 and then back down to 70. All right, so now we're going to take our 90 ounces of silver and trade for like 1.3 ounces of gold. And then we're going to go on this little line. It doesn't hit our magic mark of 90 to 1 until 2022. And then when we switch it, the 1.3 ounces of gold to silver, at a 90 to 1 ratio, we're going to get about 117 ounces of silver. So basically, if you're just, you're just trading for gold when it hits 70, for silver when it hits 90, you can slowly stack more and more gold and silver depending on where the ratio is, just by switching back and forth in a reliable way. Now, is that the absolute best way on this chart to have done things? No, because here we could have, got like 65 to 1 instead of, coming in at 70 to 1. And up here, we could have traded it for 125 ounces of silver. The problem with that is you never know when these spikes are going to happen or if they're ever going to happen. So, this 90 is a lot more likely to happen. You see it happen quite a few times here. Um, in 70, this line is 70. So 70, you can see where it hits under, where it hits the 70 mark. So that's one way to do it. You don't really have to do it that way, but I mean, another strategy would be just as the ratio approaches 70, just buy gold. And then when it goes up here, just buy silver, buy gold, buy silver, buy silver. So you can just let it, kind of dictate which metal you should be purchasing instead of, trying to trade for more or that kind of thing. But, people use it strategically. You don't really have to. I mean, if you like gold, you can buy gold the whole time. If let's say I was a gold bug and I didn't care for silver and I didn't want to do this trading, well, what this chart could tell me to do is just if I'm dollar cost averaging every month into gold, I could just buy more when it's down here. So, I might buy twice as much when it's down towards the 70s. And then when it's gone up to, 125, maybe buy half as much at that point in time because it's done so well recently that, it's likely to fall. So when it falls back down, then again, you increase your dollar cost average. When it goes back up, uh, maybe you buy less and wait. So you can use that for strategies for buying silver, buying gold, trading into gold and silver. But that is what people are talking about when they're talking about the gold and silver ratio. I like silver right now because the gold ratio is high, um, and silver has a lot going for it. I think with the EVs and that kind of thing. That might adopt these new batteries that require more silver and just silver shortages, and there's a bunch of reasons to like silver, but there's nothing wrong with diversifying either, so maybe having some silver and some gold. Hopefully this helps you to know a little bit better about timing the market. It's kind of impossible to know when the top and the bottom are. If you dollar cost average, you're going to be somewhere in the middle. So you won't get the best price, you won't get the worst price. So that's what a lot of people like to do is to just put in a certain amount each month or each day or each week, however you want to do it, and that way you're kind of not having to think and really analyze the market and try to find these tops and bottoms, which, like I said, a lot of people are not good at, and they do it wrong. So you kind of take the stress out if you dollar cost average. But hopefully this taught you something, and if you know more than I do about it, feel free to teach other people in the comments and let me know what questions you have. Let me know what I got wrong, what you would do, what your strategies are. And yeah, thanks for your time. Thanks for watching, and like and subscribe, all that good stuff. And we'll see you next time. Ow.